In the next 10 years, 17 of the 20 fastest growing cities in the world are expected to be from India. But the functioning of our municipal corporations do not exactly give us the confidence to believe this estimate. Especially when our cities are struggling with increasing migration of people from villages, water scarcity, pollution, and impacts of climate change. Municipal corporations in India have not exactly been well-governed institutions, let alone form an asset class wherein you can invest. But a silent revolution has begun playing out amongst few municipal corporations in India that could change the way these local bodies are run and funded. How? Through bonds, municipal bonds. These are instruments like corporate bonds and have been in India since 1997. But the Amrut scheme, or Atal Mission for Rejuvenation and Urban Transformation Program, rolled out in 2015, has incentivized cities to issue these bonds and kick-started the market. From the first privately placed bond of Pune Municipal Corporation in 2017 under the Amrut scheme to the latest one from Pimpri-Chinchwad Municipal Corporation in June this year, 11 municipal corporations have till now issued bonds through private placement. So city bodies of Pune, Greater Hyderabad, Indore, Bhopal, Greater Visakhapatnam, Ahmedabad, Surat, Lucknow, Ghaziabad, Vadodara and Pimpri-Chinchwad have issued bonds with an average ticket size of 300 to 400 crore rupees. The documents of all these bond issues are available on the SEBI website. In fact, Indore has been the country's first and only publicly listed municipal bond in February this year. That too a green bond. And now there are around 11 more municipal corporations that are gearing up with their bond issues. Surat, Vizag, Chennai, Kanpur, Prayagraj, Agra and Varanasi are among those in news.
कानपुर की खबर के साथ म्युनिसिपल बॉन्ड जारी करेगा नगर निगम 100 करोड़ का बॉन्ड जारी करेगा नगर निगम व्यावसायिक प्रोजेक्ट बनवाने के लिए जगह होगी चिन्हित बॉन्ड लेने वालों का 8.5% ब्याज चुकाएगा नगर
वाराणसी नगर निगम का भी म्युनिसिपल बॉन्ड आएगा लखनऊ की तर्ज पर 200 करोड़ का म्युनिसिपल बॉन्ड होगा और वाराणसी नगर निगम ये बॉन्ड जारी करेगा
At $4 trillion, the US municipal bond market is the largest and most liquid sub-sovereign bond market in the world. It represents about 8% of the total bond market in the US. In comparison, what's the market like for municipal bonds in India? What's the incentive for the urban local bodies to go for them? What is in it for the investors? Can these bonds cure the poor financial health of urban local bodies? And can you and I benefit from investing in our municipal corporations? For answers, I turn to economist Madan Sabnavis from Bank of Baroda.
So those who are compliant are in a better position to raise funds, and they're the ones who are exploring the market, and there could be more traction in this particular market.
And investment banker Arnab Chaudhary from SBI Capital Markets.
I am looking for a day when if I hold a municipality bond, then my parking will be free. Something like that.
I also speak to the officials of Pune and Kanpur municipal corporations to know their experience in accessing the municipal bond market. It's Tuesday, September 19th. From the Economic Times, I am your host Kiran Somvanshi. And today in this episode, we explore the early traces of the silent revolution that is underway in municipal corporations in India. This is the Morning Brief. Indian cities are financially starving and often struggle providing good quality infrastructure and services. In fact, the size of the municipal budgets in India is much smaller than their global peers. For instance, municipal expenditures have stagnated at around 1% of GDP for over a decade. In contrast, in Brazil, the municipal expenditures account for 7.4% of GDP, and in South Africa, the proportion is 6% of GDP. The urban local bodies in India are also amongst the weakest globally in terms of fiscal autonomy. Most local bodies in India do not have their balance sheets in the public domain, and many of them continue to follow a cash accounting system. They are over-reliant on property tax collections and on the grants they receive from the central and state governments. The level of gross municipal borrowings in India is minuscule, and constitutes less than 0.05% of GDP for all municipal corporations put together. All these observations form part of the first of its kind report on municipal finance published by the Reserve Bank of India last year. The report analyzes the consolidated fiscal health of India's urban local bodies as the central bank highlights the need for these bodies to look for alternative sources of financing, such as municipal bonds.
It's absolutely equivalent to the government borrowing in the market or even a company borrowing in the market. So today, for example, a company ABC may be requiring funds. They could go to a bank to borrow money, or they could raise a bond in the market. The same thing happens for a municipal corporation. They could borrow from a bank or financial institution, or alternatively, they could go to the market and raise a bond.
That's Mr. Madan Sabnawis, Chief Economist, Bank of Baroda. He has actively tracked municipal bonds during his previous stint in CARE Ratings Agency.
I think it's been more of a push factor because of the fact that there's a lot of urbanization which is taking place, in the sense that the overall demand for public services has gone up across all levels of the government, and therefore there is need for every level of government to become relatively more independent. So in case you have to raise funds, you also realize that the kind of devolution of funds which normally goes from center to states and from the states to the municipal corporations has also tended to lag. So that is the reason why municipals have been looking to raise funds. And since the bond market is something which everybody feels can deliver, not just in terms of providing an avenue for funds, but also for ensuring that there is a lot of financial discipline which comes into the way in which municipals are run, which also means that they will have to necessarily perform when they are trying to get a good rating in the market. So all these things have actually worked towards this nudge which is being given to municipals to raise funds from the municipal bond market.
It's not that municipal bonds are a new concept in India. However, the nudge that Mr. Sabnawis was talking about is relatively new. The Bengaluru Municipal Corporation floated municipal bonds for the first time in 1997. Since then, the Indian municipal bond market witnessed a steady growth till the mid-2000s, with 9 municipal corporations raising around 1,200 crore rupees. But the bond issuances came to a sudden halt after 2005 with the launch of Jawaharlal Nehru National Urban Renewal Mission that provided investments in the form of grants of about 1 lakh crore rupees from the centre to the municipal corporations. In recent years, there has been a resurgence of municipal bond issuances in India, with 9 municipal corporations raising around 3,840 crore rupees between 2017 and 2021. This is largely due to the government providing financial incentives at the rate of 13 crore rupees per 100 crore rupees of bonds issued under the Amrit scheme. But these carrots come only when the local bodies get their acts together.
When a municipal corporation decides to raise a bond, there are certain prerequisites which have to be met, which means you need to be disciplined, you need to have your annual reports, you need to have all your accounts in place. So normally what happens is that if you look at corporate bond market, which also includes your municipal bonds, we have seen that the appetite is there normally for higher rated instruments. So you normally have to have a rating of AA and above. Maybe up to A, you could still manage it. So these municipal corporations which we are talking of are the ones who have gotten the right kind of rating, which is something which will appeal to investors. Because at the end of the day, I may be willing to float a bond, but there should be investors, people willing to invest. Now, these investors which we're talking of normally would tend to be institutional investors who have their own internal rules. For example, if I'm talking of a provident fund or I'm talking of an insurance company, which typically would be having appetite for these kind of bonds, which would typically be of long-term duration, maybe 5 years, 7 years, or 10 years. Municipals who see that they are well-governed, they actually have a good rating, which is the major signaling mechanism which is sent to the market. They're able to also command a good rate of interest. So it's definitely lower than what the banks are charging. So as this kind of transformation takes place and municipals are able to put their house in order, they're better governed, able to have better budgets, better numbers which they're able to show, get better ratings, there would be progressively more of these issuances in the market.
So how do you see municipal corporations coming up the curve to qualify for this?
See, personally, I think it's going to take a long time because there are a large number of these municipal corporations which are there in the country of different levels. Now, the critical factor is how do you actually make sure that your accounts are in order? Because SEBI says you need to have 3 years of audited accounts. Now, what we have seen is a number of these municipal bodies, that's urban local bodies, have not really created these kind of accounts. When I say created accounts means you don't really have audited accounts. Very often what happens is that you have a budget and you go on the basis of the budget. But this is not good enough. And again, in layman's terms, you also need to have a balance sheet and profit and loss account. Now, the difference really is that when you draw up a budget, like what happens for the central government or the state government, everything is based on cash. Meaning, thereby, if I get a certain amount of cash in the form of a tax or a fee, I can charge it to the budget. Similarly, if I make an expenditure, it is counted as an expenditure only in case I make the payment. However, the moment I go into the double account bookkeeping system, which goes into a P&L account, which holds for a normal company in India, it goes on the basis of accrual, meaning thereby that even though I have not received the money or made the payment, if it is due for this particular year, I'm able to book that as a part of my income or expenditure. And then I get the entire thing audited for the last 3 years, and I keep following these processes. And this would also mean that there is a better cover which you have, or better coverage which you have for various other activities of the municipal corporation, not just in terms of the expenditure and about the timelines and all that which go into completing projects, but also in terms of collections. Because that is a major lacuna which is there, that municipals are not able to actually collect what is due to them. But once you have this proper accounting system which is being audited, automatically this kind of financial discipline comes in. Now, the larger ones, of course, have already gone through this process. So therefore, they have everything in order. And that's why they're in a position to get a favorable rating and able to access the market. But for the large number of them, it's still in the incipient stages. And lots of investors are willing to invest and lend money to the municipal corporations. But for that, you need to make sure that your house is in order. And that's what they're working to do.
So I turn to the man who is in the thick of action, helping municipal corporations to get their acts together to become financially savvy and bond market ready. Arnab Chaudhary heads the Debt Capital Market Division of SBI CAPS, an investment banking firm that has been involved in municipal financing since the handling of Pune Municipal Corporation's bond issue in 2017. Arnab, having municipal bodies with their baggage of poor governance versus the sophistication of the bond market, how do you see this balancing out?
That is the biggest challenge, honestly. In a broad term, it is the mindset, right? That needs to change. The way people have been working. And let me be very honest, we have been working with many of these municipalities. They are overwhelmed with the works, the mundane day-to-day work for a municipal officer that has to do. Now, bringing in something new and telling them that aapko ye karna hai, that becomes another additional work for them. I will tell you in terms of, again, not naming names, but the challenges that we see is that, like, we went to meet one municipal commissioner, and that day he had a darbar in the sense that he was meeting the common people on that. So we had to sit out and waiting for him. The kind of issues that he had to deal, once you have seen few of those, you don't feel like going and telling him, what's up, you need to look at a financing of this. It seems like that is the list of the botheration that he has at this point of time.
So, as an iBanker, when you actually kind of advise such corporations, what all you have to do? How much capacity building? How much hand holding? What all is your role?
Let me put it this way. One municipal, if suppose they haven't done it before, then it takes 9 to 12 months to make someone ready to at least start talking to the investors. Okay, so it is a whole journey and it requires real work. So you need to start off with first explaining why you need to do it. Then who are the stakeholders who needs to come in? Just to give you an example, many of the state municipalities have their documents in their vernacular language. A municipality in Guwahati will have all their papers in Assamese language. You need to have them translated to English. These are the words. I don't do the translation bit of it, but we need to make them aware and then choose those portion of the documents which needs to be translated. The other thing is in terms of the litigations, the biggest challenge that you have. Many of the municipalities will have litigations which will be in their books. So to run through those litigations, you need to make those disclosures to SEBI before you actually file it. I'll give you an example. There was one municipality where we had filed it, and then there was a delay in actual execution because of some other factors. Within that time, again, when we went for the refiling, which was a few weeks later, we needed to check if there were additional litigations which has come in and there was disclosures that needed to be done. So those are the challenges. But see, the positive thing which I need to put in record here is every stakeholder, be it central government, be it state government, be it SEBI, and be it all the other regulatory entities who regulates the investors, be it IRDA, be it PFC, all these guys are onboarded onto the fact that this is something which needs to be done. The municipal market abroad is very, very big market, and it is huge. We are not even, we were not there. Let's put it that way. So because of that, if we see that there are challenges, people do, basically they're willing to look at and try to find a solution. So I don't see any of those issues, as you mentioned, to actually break a deal.
Great to know that. Suppose if a municipal corporation thinks of going for it, what all are the stages before it actually issues the bond?
The first thing that we generally look at how big the municipality is, because to approach the capital market, you need to have a little bit of scale. What happens is, if I'm approaching an investor, right, he needs to do a credit due diligence or credit appraisal for that project anyway.
Right.
Now, if the issue is too small, then he may not have the interest to go through the whole process because the allotment could be very small at the end of it. Secondly, is the most important is the credit rating that the municipality has, if it is already has it. If it doesn't have, then we also help them getting a credit rating that is required, right? Because many of the investors in Indian market as of right now, institutional investors, still has a requirement that they can't look below a particular credit grade. It is AA. So if the credit grade is below AA, they would not be able to invest anyway. So we try to see how can it be made AA, right? So that is one. The biggest process is obviously meeting the municipalities, taking them through the journey, telling them what exactly needs to be done step by step, and also getting the responsible teams in place for there, like who is going to give me what data. I was meeting somebody yesterday, one of the municipalities, they're very keen. But the point is, they are not very sure how to identify the projects against which the funding has to happen, right? So you identify the projects, you try to find out the valuations of those projects in terms of the cash flow management. So as I said, these are the initial things that needs to be done. And simultaneously, of course, you look at the book and see how prepared are they, how well maintained are those, how far do we need to go back. The bigger ones and the better ones in terms of their credit credentials are a little easier. The smaller ones and which, or the size wise, if they're small or they're suppose the credit rating wise not the biggest, they require a little bit of more time. So there also we are trying to see if we can do a pooling. They're also trying to see if there is a credit enhancement mechanism that can come in. So there are things that are happening. As I said, it's an evolving process. I'm sure many of those municipalities also eventually come in.
I'm curious to know here that when you mention about the projects, generally it is seen for municipal corporations, getting their collections regularly, promptly from the citizens is an issue. So when they roll out such specific projects which are under bond, then isn't that a concern for the investors that whether the municipal corporations will be able to collect enough for the interest payments to be made?
So the money that they can raise is generally linked to the collections that usually happens. So basically, suppose there is a tax collection that, I'm just giving you an example, property tax collection that happens for this particular municipality. And that property tax collection goes into a particular escrow account. Now, the way it is ring fenced is that this collection has to be good enough to service the interest as well as the principal over a period of time. If suppose this collection dwindles, it goes down for some reason, or suppose there is a withdrawal from that for other works, not for this payment, that is where all this documentations and regulatory things comes in. And secondly, whatever incentive the government is giving, suppose if you raise 100 crores, you get a 13 crore. That 13 crore has to come to this account first because that is on day one. So the municipality can't take it and take it away. So that 13 crore comes in. Secondly, you keep on building up this corpus because what happens is in a bond, typically the payment happens at the end of the maturity, principal repayment, right? Now, if I am a municipality, I have raised, suppose, 100 crores for 5 years, and I'm paying a coupon of, say, 7.5% every quarter. So what happens is on day one itself, I get a 13 crore that comes into that account. And as well as every month, there will be this tax collections, which will initially, as we calculated, should be enough to cover whatever my obligations are. Now, I will first carve out what is required for the interest payment. So that I will keep aside. Then only the money will be released for the municipalities to use for anything else. As well as every year, I will keep building up a 20% of that buffer for the principal repayment. So 100 crores, every year 20 crores will be set aside for repayment at the end of 5 years.
I'm just wondering, like from what you mentioned, it requires financial discipline and some kind of systematic arrangement. Do you see any resistance from the corporations?
Again, without naming names, I was meeting yesterday somebody where the top two guys said we want to do this, and then they said that don't expect anyone from our team to help you on this. You'll have to do this alone. He said you'll have to connect to me because those guys, till the time we start working and they see that there are some positive things that are there, they will obviously be shying away. So you will only get frustrated. So let's talk directly at this point of time. Once we get some kind of a progress, then we will. So that those things will be there.
Now, coming to the investors, how ready people are for this kind of instrument? What are their expectations? What are the challenges or what keeps them away? And what is the depth of this market?
That is shallow. It can be much deeper. There are few players who are very keen. They are regular in it. SBI as a group is one of those. There are new players who are coming in. I can mention that NAPFIT have a mandate to look at municipalities, and they have invested in the last one that has happened. There are others also. The state government entities are very keen for especially their places where they are doing it. The two main challenges, one is obviously because there is no secondary market. If I invest in it, I generally do not get an exit. When we say that internationally this market is very vibrant, why it is not the same here? It is because internationally it is something which is traded quite well. If suppose you or me as a retail investor have invested, we have invested on a 5-year paper. I might need the funds after 6 months or 7 months for whatever reason. I need an exit. Now, municipal market at this juncture in India doesn't give you that exit because it doesn't trade. We need that players to come in. And that is a general story about Indian corporate bond market as a whole. This is something which everybody is trying to promote. That is the first challenge that we have. The second challenge that we have is in terms of the size. The projects are not very big. In a municipality, solar electric generation project will be what? 50 crore, 60 crore project. It is not going to be a very big one. So if the issuance is 200 crore and a particular entity has gone through the process and then gets an allocation of 5 or 10 crore, it doesn't really excite them. So that is the challenge that we are facing. So these are practical challenges. We will overcome that. For last 3-4 years, what has been happening is only one issuance, 1 year kind of a thing. This year we had one. I am hoping that there will be at least 3 or 4 this financial year itself.
And what I have seen is most of the municipal corporations go for a private placement. I think only one has got listed, Indore. Why so?
Indore is the first one and only one. See, private placement is easier because it is bilateral, almost kind of a bilateral agreements that happen. Public issuances has their challenges in the sense that the process is little lengthier. Then the cost-wise, it is a little more expensive than a private placement. For a public issuance, you need to do road shows, then you have to list it, and the diligence process is a little longer. But I think we are converging. At some point of time, it will become indifferent. I guess, and this is my wish as well, is that eventually it has to happen in all public issuances only.
And how long do you see when, actually as citizens, we will be able to invest in our municipalities? When do you see that happening?
3 to 5 years.
3 to 5 years?
Yes, I am looking for a day when if I hold a municipality bond, then my parking will be free. Something like that.
Wow.
So that because I'm a part of the municipality, right? These are the incentives which will make people really be a part. See, Indore has been the cleanest city of India for some years now. There is that public awareness that has grown. Once you have done it once, then second time, then it becomes an ego issue. Then you start doing it for yourself. Then when Indore came in for the public issuance, those people were saying that they are mirror city guy, so I will obviously put in money for my own municipality. Similar sentiments, similar things has to happen. It will happen. It will eventually happen.
Earlier this year, the National Stock Exchange launched India's first municipal bond index. The index currently has 28 municipal bonds issued by 10 issuers, with all having investment grade credit rating of AA. The average yield stands at 8.58%. Now, according to the RBI report, 66% of the municipal bonds issued in India have been used to finance water supply, sewage, drainage, and water treatment projects. I managed to have a word with Kripanand Shukla, the Chief Financial Officer of Kanpur Municipal Corporation, as the local body is gearing up to roll its first municipal bond.
तो कानपुर नगर निगम के पास पैसे की कमी नहीं है कि हमें क्या करना है, हमें लानी है फाइनेंशियल डिसिप्लिन।
राइट।
हमें एक कानपुर को एक ब्रांड वैल्यू बनाना है, ऐसी स्थिति में लाना है कि आने वाले फ्यूचर में खुद से ये सस्टेनेबल हो। ये सारी प्रिपरेशन पिछले लास्ट 6 मंथ से सारी करनी है। हमने अभी तक यही सफाई करी है ना। म्यूनिसिपल बॉन्ड जाने से हमें ये पता करना पड़ा कि म्यूनिसिपल कॉर्पोरेशन की क्या क्या एसेट्स हैं, हमें ये जानना पड़ा। तो इसके लिए हम लोगों ने कमेटी बनाई, इसके लिए फिर टेंडर लगाया, फिर लोगों को हायर किया जगह जगह जा करके कि उसको आइडेंटिफाई करें, उसको उसकी वैल्यूएशन निकालें, मार्केट वैल्यू निकालें, सबके रेट निकालें, जो भी है। तो इस तरह से हम लोगों ने अभी तक जो इसका वैल्यूएशन निकाला वो हमारे पास 13,000 करोड़ की वैल्यूएशन आई, 13,000 म्यूनिसिपल कॉर्पोरेशन कानपुर का है एसेट वैल्यूएशन के लिए। ये फायदे हुए हैं। अभी तक मतलब इससे पहले हमें नहीं पता था म्यूनिसिपल कॉर्पोरेशन को कि हमारी एसेट वैल्यूएशन कितनी है, तो ये एक बहुत बड़ा फैक्टर रहा। दूसरा ये है कि अन्य चीजों में कि क्या लीगल केसेस हमारे पेंडिंग हैं, क्या हमारे पास लाइबिलिटी फ्यूचर में आएगी, तो इसके लिए हम लोगों ने अलग ही इसका अभियान चलाया, कमेटी बनाई, इस चीज को हम लोग लेकर आए कि हाँ हमारी ये लीगल केसेस हैं, जैसे हम फ्यूचर में क्या प्लान ले सकते हैं, इन फ्यूचर जो है 5 ईयर्स जो है जो बड़े प्रोजेक्ट हमारे क्या क्या हो सकते हैं, उनका हम लोगों ने इसमें आइडेंटिफाई किया। ये सब हमें उसमें डिस्क्लोजर देना है। तो ये पिछले लास्ट 6 मंथ से हम लोगों ने इन्हीं सब चीज की एक्सरसाइज की और स्टेप बाय स्टेप हम लोगों ने हर चीज को उसको परफेक्ट कराना है। आज की डेट में वो ड्यू डिलिजेंस हमारा जो प्रोसेस है वो ऑनगोइंग है, वो लास्ट स्टेज में आ गए हैं। हमारी बैलेंस शीट पिछले 3 सालों की जो सेबी पैटर्न पर जो चाहिए, जो नेशनल अकाउंटिंग मैनुअल के अकॉर्डिंग कंप्लीट हो गई। तो ये काफी मतलब चीज आप देखेंगे टैक्सेशन में, टैक्सेशन पूरा ऑनलाइन कर दिया गया। टैक्सेशन अब आपका कभी भी कोई भी प्रॉपर्टी का किसी भी समय आप अपने ऑनलाइन जाकर देख सकते हैं, उसको पेमेंट कर सकते हैं, किसी भी इलेक्ट्रॉनिक मोड में से हैंड कर सकते हैं और आप उसी से अपनी रिसीप्ट भी डाउनलोड कर सकते हैं। ये काफी चीजें हम लोगों ने इसको इम्प्रूव किया है और इन फ्यूचर अब तो कई चीजों का दिख भी रहा है कि हम क्या कर सकते हैं कि जब आप किसी चीज को आप रिफॉर्म में लाते हैं तो आपको पता चलता है कि अपनी कमियां क्या हैं, तो फिर आप धीरे धीरे आप स्टेप बाय स्टेप और इम्प्रूव करने।
While there are benefits accruing to the municipalities, there are challenges too. Mr. Kunal Mandwale, the Chief Compliance Officer of Pune Municipal Corporation, spoke to me about the challenges.
We need to submit them the present situation of legal litigation, amount involved in the litigation against the municipal corporation. That again having a tedious task, because if you see the corporation level, the litigations already started 10 years, 20 years ago. They are still in continuation. Present officer who is in charge of that legal department may or may not having that documentation in his hand, number one.
Right.
Number two, that documents again a regional language or sort of it, then again need to translate and all. Number three, what happened, if you see the guideline says the municipal corporation shall appoint a municipal compliance officer. And they also designate their qualification requirement. Who's member of ICSI, company secretaries and all. But what happened? I also a member of ICSI, fortunately. Otherwise, if you see all municipal issuance till the date, nobody having a professional qualification to hold responsibility as compliance officer. So that is again challenge. But there is a difference between corporate and corporation. For that reason, we need to have a company secretary as compliance officer who can try to bridge the gap between corporation to corporate.
Any other challenges from the point of seeking out investors?
What we are planning to add while we suggesting to SEBI, say for example, while we raise the municipal bond, we go to the Mumbai. So all investors are there. But what we are recommend to the SEBI, if they allow category of the investors, say for example, in Pune, we have lots of gold merchant and builders. For making the road shows to the Bombay, we can make the road show on Lakshmi Road for the investor. That won't build the confidence of the investor, local investor.
Correct.
Say for example, if the local builder invested rupees 10 CR in the municipal corporation, so he also, that having feeling ki nahi bhai, I'm also investing in my city itself for my development, for citizen
Right.
at large. That is what we have suggested to the SEBI.
The glass is half full and half empty. For India's over 200 municipal corporations and many smaller urban local bodies, the initial cost of bond issuance can be prohibitively high. Besides, the absence of an active and buzzing secondary market for these bonds effectively keeps out a large base of institutional as well as retail investors. While municipal bonds are not a substitute for conventional lending, but they do allow a new set of investors to participate in strengthening the local government bodies. And as we heard, in the process of tapping the capital markets for funds, the local bodies become efficient in terms of disclosures, in maintaining their books of accounts on double entry system, and in assessing their assets and liabilities. Credit rating also plays an important role in attracting new investors. For example, of the 94 cities that were assigned credit ratings in 2018, nearly 60% of them received investment grade or above rating, highlighting the potential for municipal bond financing in India. Even if municipal corporations may not have lofty fundraising ambitions to the bond market, getting nudged or pushed to clean their books and set their house in order in itself is a big opportunity to improve their governance. While it is a much delayed start, the adoption of municipal bonds can be accelerated by rolling out tax incentives to the investors or providing real-world concessions like free parking or rebate on property tax to the citizens who invest in the local body's bonds. The possibilities are enormous and the future promising. So that's it for today. This is Kiran Somanchi from the Economic Times, and you are listening all about municipal bonds only on the Morning Brief. A special thank you to our guests Mr. Madan Sabnavis, Mr. Arnab Chaudhary, Mr. Kripanand Shukla and Mr. Kunal Mandvale for sharing their amazing insights. This episode was brought to you by sound editor Rajas Nayak and producer Sumit Pandey. TMB's executive producers are Anupriya Nair, Anirban Chaudhary and Arijit Burman. Thank you for listening, and if you like this episode, do spread the word. A new episode of the Morning Brief podcast drops every Tuesday, Thursday and Friday. Don't miss it. It streams on Amazon Prime Music, JioSaavn, Spotify, Apple and Google Podcasts. And of course, ET's own audio platform, ET Play. Enjoy the festivities. All clips used in this episode belong to their respective owners. Credits are mentioned in the description.